now. What is my 14375?
So it's just below the 38% line.
Okay. So I took it. Yeah, so I took it right in here.
Mm-hmm.
And 395. I can't even. It's hard to see.
That 395 is that 38.
Okay, yeah. So I took it below that.
Mm-hmm.
And when it hit the support, when it hit that 38%, I took my profit.
Nice.
Okay. So I kind of did that all the way through. I actually did a couple more in here, but if you look at these, they're all small, but
mm-hmm.
This was my first one.
Mm-hmm.
Can you see it?
Yeah.
Yeah, and all the way down. I mean, I just kept doing that. So whether I was above or below my support or resistance
Uh-huh.
on all these different trades, depending on which line they were coming up to,
mm-hmm.
is where I took the profit.
Nice.
And then I started coming back as I started going more. 60, I was either basing it off the 60, 30, or both if they were matching up.
Nice.
Like this one, it was based on this one. This one I lost because it hit my stop loss. I got out.
Gotcha. So your stop loss, how far away was your stop loss from the entry?
It was small.
Okay.
It was small. My stop loss, I took my price at 14071. I hit my stop loss at 13975 because that was a resistance line.
Okay.
139. That was this. The 38% was 139. That one.
Mm-hmm.
So when it started to go past that, I just got out.
Okay.
I didn't really. And then this one, one trade, I won it, and then there was one in here. Okay, yeah, this is the hedging.
Gotcha.
So this one, I moved. Come on. Okay. So this one I got in 13911.
Mm-hmm.
Was I can't. We'll find it on here somewhere. We were down. I forget where we were, but it was. And then that was my next line up that I wanted to take on the resistance line.
Mm-hmm.
It started to go the other way on me, so I got out.
Mm-hmm.
Right, I just closed it out at 30 because it kept moving. I was just looking at the dollar amount. So I closed it out at $30, but I had hedged it at 2 to 1.
Nice.
So I went from 5 to 10. I hedged it here,
mm-hmm.
and then I took my profit there. I ended up winning total on this 148. So between the two, I still ended up winning.
Nice.
And then that was, so really, if you look at this, I only had, I think yesterday I did 2 losses, and that was one of them.
Okay, so let me grab this screen real quick.
Okay.
If I do this, I can scroll this up. So which ones were we looking at? So what lines?
If you look on the date line,
Uh-huh.
anything that says 13.
Okay, so here, all the way down. So all of those. So let's just kick this guy on. So we got 25.5 plus 21.5 plus 44 plus 28 plus 17 plus 25. Oops. 25.5 plus 21.5 plus 21.5 minus 48 plus 28 minus 30 plus 48 plus 34. You came out with $236. And if you divide that
and they actually minus, whoops, what happened?
What's that?
What happened to my screen here? Why is that? Okay. Actually, if you look at the bottom two, the minus 30 and the plus 48, that was the one I hedged.
Gotcha.
So.
Nice. So that was the hedge. So you really only had one main loss, where this one you hedged it and got out of it, and so there was a profit.
Yeah.
If we go back to the calculator, so you made $236 on this. We divide that by 4806, which is your balance. Well, it is over here. Let's see over here, trade balance. So account is a full amount. Let's just go to trade balance. Right there. So let's delete that. 5,007. You made right around 4%, almost 5%, in a very small period of time. That is fantastic scalping.
Yeah, that was literally the first time I've ever been able to scalp and be profitable.
Nice.
And the way I was doing it is just like this. Here's my trade. I call it my trade charts. So I've got open this up. I draw my support and resistance lines. Use the retracement tools. Oops. Which one? I don't know. I got too many of these open now. Hold on.
You're good.
So. Okay. So anyway, so what I'll do is I'll draw the support and resistance. And then this is my 30 and this is my 15. I don't want that one. So then I use these two. I'm looking at, I do it just like this. So I've got my, my long term, 240, kind of see the trends. And then I'm looking at these two to place my trades. I try and pretty much, I would wait until these two are in sync, 30 and 60.
Yep.
With the buy and the sell. And then I'm looking at, down here, I'm looking at which green and red are on top, which way they're pointing, same thing, majors and minors here, this. And then I would get it in between these lines and, right on the half hour.
Nice.
So if it wasn't right on the 30 minutes, if I wasn't matching up, I just wait. And all right, I'll wait till the next hour or the 30 minutes. Sometimes this one, the 30 minutes, would not be, some of these would be in the direction that I wanted, but these would indicate more, and I would see like this was a bad example, but here would be kind of like a downtrend. So if we were getting closer to this, and even though this maybe said buy, the 30 said buy, if everything was really strong as a sell, and we had a lot of time left on here, I would still I did the sell just to get to these points.
Gotcha.
Whether it was these points or these. So, this is how I set it up.
Nice. And so you're using indicators to validate the trade, and you're using your technicals to figure out where your position is going to be if you want to be in the trade and where you want to get out. So, awesome.
Correct.
And so what I want, just so
and
we
I
can...
actually did one more. I did one more this morning, and it worked out as well.
Nice. So what I want to focus on are trading rules. I want to create some trading rules for you today, so that what you're doing with the account that, let's go to here, oh no, sorry, this guy. So what we're doing in here, I'm going to shrink this back down. Oh, there we go. So what we're doing in here, in the one that you're going to trade is live, whatever one it's going to be, so whichever one you decide.
156.
Okay, so 156.
I did one trade in there a couple days ago. I lost.
Okay.
Anyway, go ahead.
So we're good with 156. We'll do 156. What I would like for you to do is to rename this in your FX, if you can.
I don't know how.
I know it's so much easier in capital city markets, but here it's a little bit more difficult. So I don't know how to change them personally myself.
Oh, okay. All right.
So no worries in there. I just go by number myself. So if this is the account that we're trading, as if live, I'm going to create rules for you to follow in this account, because what I want you to do is, if with the funded account that you're going to get, I want the rules that we've followed in this to help you with your funded account as much as possible.
Okay.
And so I'm going to throw some trade rules on real quick. So okay, let's copy that. Alright, so it's going to be in your Slack. Do you have Slack open? Can you open that?
And
What's that?
no, we'll talk about it later. Go ahead.
Are you talking to me?
No, yeah, no, go ahead.
Oh, gotcha. I don't know if you were talking to me, if that was someone else in the office or something.
No.
Okay, so here in Slackbot, where's there's my cursor. Alright, so in here, we go to yours, and go down, here are the rules. So so trade as if live rules. So this is what I want you to focus on. So I don't want you to go below 2,000% margin level. If the account is below that, this level, close or hedge. I don't want you to have more than 3 trades in the same direction. I want you to try to limit trades to 1 trade. Unless, of course, you're creating an exit strategy for that, so either a hedge or penning, or I can't think right now, sorry, my brain's a little bit foggy. Price averaging. So unless you're, so limit to 1 trade unless you're in an exit, so hedge or price averaging. And then every trade has either a stop loss or a penny hedge in place. That's your exit strategy. And then only place 0.1 lot size trades. And this rule I'm going to stick with you on for that when you're trading as if live in that account. So the reason for this keeps your account safe. I can work out of it. If you get below this, I want you to either hedge or close out a position. The 3 trades will also keep us in this region. Will also help us with this. Plus, it will limit you on how many price averages you take as the market might be moving up against you. If you can, all of these trades that you placed, there was only 1 trade in place besides the hedge, correct? This morning?
Yeah, I'm really, when I tend to jump into 2 or more, I tend to lose focus and mess it up.
Okay, so this will be a good rule then. And then I definitely want to have a stop loss or a penny hedge all the time. And the penny hedge, if you're watching, so the stop loss and the penny hedge, this is kind of in place for you if you can't be around the computer and you have to walk away from it. The hedge, I would prefer not having a pending hedge, but actually like a place that you're going to hedge if there's a post past a certain point. So not necessarily a wick goes past a certain point, but a post past a certain point. So because that's where I want you to hedge when it posts past it, because now it's broken that resistance or support level and you're in place. Because a pending hedge, it's just going to be a ballpark number like 25 pips or whatnot. Where an actual hedge, it's more of, hey, I don't want to be in this until it breaks this level. And the reason I don't want to be in this until it breaks that level, because I might have a bunch of wicks. And if we go back to one of your green charts,
yeah, I get what you're
you have a ton that stick above that. So,
which is what I did yesterday. I mean, I didn't let it post because I was, I'm only on a 30 minute. But when I saw when it was solid and kept moving in a direction and broke my resistance line, that's when I just closed it out and hedged the other way.
Gotcha. Perfect.
Was that good strategy or no?
No, I like it.
Okay.
For me,
but I will put a stop loss on every trade.
Okay, that's key. That's the proper money or that's the proper extra strategy, which is literally the cardinal rule number 2. So cardinal rule number 1 is proper money management. So lot size, margin levels, stuff like that. And cardinal rule number 2 is I have to have something on my exit. So I don't care if you put a stop or take profit in or not. That's up to you if you want to manually close those out. But I want to have something in there that's going to protect if it goes against you. in case you're trading and all of a sudden an announcement happens that you weren't aware of, or something for some reason. Trump tweets or something. So I want those in place, and then only trading a 0.1 lot size. The reason for this... Go ahead.
No, so $1 a pip, basically?
Yep, $1 a pip. The reason for that, the account that I want you trading, I want it to be a $2,500 account. Because that's... I'm going to give you realistic viewpoints. I mean, we have people who've received more, but on average, it's about $2,500 is the first funded amount. After that, it'll continue to grow. But if you get used to trading these lot sizes of one, you can place a few of those underneath the 2,000% margin level and be okay with the $2,500 account. And when you go live and you're trading at a 0.1 lot size, the benefit of that is you have room to get out of it, and we want to see. I don't care about what kind of percentages you're growing. I want to know that you're, one, protecting the backside of your trades, so you have an exit in place, and two, that you're winning pips. I want your goals to be pips. I don't want them to be dollar values. So, because I can always increase the lot size down the road once we become good in live trading and still follow these rules. I can always increase that and increase how many dollars I'm making or what percentage I'm growing. But if you can get a consistent amount of pips per day, that really is what wins at the end. As long as you can have a positive pip count at the end of every single day, there's growth. So follow these rules specifically on that one account, and this is what really is going to help you with your funded account. Because the goal of the funded account, and this might be reviewed a little bit, is for us to be safe with the account, for us to slowly grow the account, for us not to address our losers, to let our winners run a little bit, and so cut our losers off quicker and let our winners run a little bit longer. And with that slow, steady growth every 3 months, because the first, so your first initial funding is going to be a smaller amount, and then your next two are also going to be not quite as small, but they're going to be adding to this. But the third and fourth funding is where you really start to see a huge change. And the statement was, because he was talking to a friend of mine, the guy who funds these, he said, Mike, the third and fourth funding, I will fund you more than you could have earned that entire time if you were trading at a more risky level. You couldn't earn those amounts that I'm going to fund you initially. So let me make you wealthy. Just show me that you're going to take care of my money. Just show me that you're going to be careful.
You want to see stability. You want to be stability and safe. I get it.
Exactly. And these rules and really can help us with that. So hold yourself very strict to these rules on that one account that you're trading as of live. But other than that, you've got a system down. Were you able to watch on the general Slack the scalping video?
No, not yet. Yeah.
Okay.
Gonna get into it today. I did not have time.
No, you're fine. So this guy right here, you can do it over the weekend or whatnot, but it shows you my technique on scalping. Right now it's a Friday. We've had a big move already in the market, so we might be kind of pittering out here. We're both with FX Choice, so our market closes at 3. Let me close this guy. So our market closes at 3. If you were in capital city markets, it actually closes at 2. So over the weekend, some of the rules that I want to throw in there, that's also going to be some rules I'm going to add to yours. Let's add some additionals right in there. Let me ask
you, I don't mean to cut you off, but let me ask you on that, because typically I will get out now lately. I mean, I'm always out, by the
Okay. So I do want to put...
I got bit once or twice, and I didn't like it.
No, I understand that.
The first couple of times when I was in my Orlando account, I didn't, and I'm like, hey, God, look, I made so much money. And I was like,
Yeah.
I was like, hey, not so much money, but I'm just thinking, hey, this was like, it worked out for me really well. I was so happy, Sunday, and I'm at the park with my kid, and I check my phone. I'm like, oh, God, that's great, look.
Yeah. Oh, yeah.
And then, I got bit. I like the good days, not the days that I got bit.
Exactly. No, I understand that. So
do you want me to stay in on the weekends or not?
So the two rules I'm going to throw in here, you're going to see them pop up on yours real quick, but let me finish typing this one second. So 2 p.m. is FX choice, and 1 p.m., and this is p.m., this is Pacific Daylight Time, 2 p.m. Pacific Daylight Time, 1 p.m. Okay. So here's the new two rules. So if you have to be in a trade over the weekend, it must be hedged. If possible, exit all trades over the weekend. 2 p.m. Pacific Daylight Time, FX choice closes. 1 p.m. Pacific Daylight Time, Capital City Market closes. So.
Okay, so let me ask you this though, since I'm not very good on hedging, and I'm not really a big fan of it, if I'm not sitting there watching it, if I'm hedging over the weekend, do I do a stop loss as well? Take profit stop loss?
Nope, on the hedge over the weekend, it's an automatic, everything comes off. And the reason being is you want a perfect hedge. Okay, let me actually edit that. So just so it's a
What do you mean everything comes off?
All take profits, all stop losses.
Okay, on both trades?
Yep. Yeah, on both trades. So the whole point of this is if you have a big, like say 200 pip gap in the market, what you had, the difference between the hedged, the buy and the sell, that difference stays the same regardless. So if it gaps 200 pips, you didn't make or you didn't lose. You've maintained that difference, and that's it. And then you can address it once the market opens.
And that doesn't mess up my margin or force me out of anything, right?
It doesn't mess up your margin until you close one of the other trades. Okay. So the only way it'll mess up your margin if say like you had here's the example that happened to someone. They had a buy trade. They then took a heavier sell trade, so a 2-to-1 sell, so they were heavy on their hedge. And then they placed another buy trade, so they were equal on both sides. But they had their take profits in place over the weekend. And so when the market, this was over the 200 pip gap that the Euro USD had. You can see that one. If we zoom out to the 1 day, this guy right here. So what happened when that occurred, the take profits on those buys closed those positions out. So automatically she was in a bad position, and her margin was very low. It almost got to the point where it would have margined out that thing. So take profits, stop losses, they all come off over the weekend when you hedge. So that the trades have the ability to move together, but not one close when the market opens if there's a gap in that direction.
Got it. Okay.
So if you have to be in a trade over the weekend, it must be a perfect hedge and all stop losses and take profits are removed.
Is your screen, like I'm not seeing anything you're typing or pointing at.
So I type it on mine because I can edit it on mine. So if I come over here on your screen, I click here,
okay.
I can't edit. So I have to do it on my side.
No, I thought maybe we were frozen again.
Oh, no, you're good.
Okay.
But yeah, so
All right, I got it.
what would you like me to help you with right now? Is there anything from that list that would be good for us to go over that you want to kind of brush up on? Or?
Yeah, I mean, I know it's something we kind of briefly talked about yesterday. You were concerned with, you mentioned hits versus profit.
Mm-hmm.
I still trade off of profit.
Okay.
So, like when I'm in my, what's it called, Ameritrade account, I'm off profit. I'm looking at every trade, kind of like what I did yesterday.
Mm-hmm.
Because I'm still with the indicators. Okay, let me go back here. I use the 7 and the 20.
Okay.
Right? So you can see this, right?
I can see MetaTrader 4.
Okay. So I use the 7 and 20, and when I'm looking for trends or I'm looking for trades, I'm in like this. I look for the crosses.
Okay.
And I'm a trending kind of thing. So, and maybe like in this area, depending on some of the technical analysis I'm doing,
mm-hmm.
I may come in at this point and say, you know what, we're still on the uptrend, even though this candle, was down here and we're hitting this line.
Mm-hmm.
So I still may put in a buy here.
Oh, I agree.
But one issue that I've run into a lot is when I'm looking at these, because that's a day chart. So
mm-hmm.
I'm in a lot of these, so when I usually base it off let me see, I start with my 4 hour,
mm-hmm.
which is where I really make my decisions on trends.
Okay.
But then when I trade, I'm usually off at 30.
Okay.
So a lot of times when I'm looking at pips is where I get hurt.
Gotcha.
Because I may, this isn't really a good example, but I may come in here and I may put in a buy, but I'm thinking, okay, I want, 20 pips or something,
mm-hmm.
right? But a lot of times it'll flip the other way. Like it'll go up, maybe get 18, whatever, and I'm not watching my computer, and then all of a sudden it's way down here and it stopped me out.
Gotcha.
So I have a hard time gauging bigger pips than I do the short runs, when I actually can watch it.
Mm-hmm.
And I'm looking at it and going, okay, you know what, I've made, $50 off this trade, or I've made $100, or, 30, I'm happy because I feel like maybe it's going to start flipping the other way on me. And I get out. And it's not really, I haven't really scalped it based off the indicators yet.
Gotcha.
But the problem I'm having with the indicators is if I'm basing it off the 240 or the hour, a lot of times I'm saying, okay, in here, I can get, my goal is to get, 20 pips on a sell, or 50 pips on a sell. The bigger chunks,
mm-hmm.
and I miss too much. Because it'll either come down this far, I get close, and then it goes the other way and stops me out.
Okay.
So when you said yesterday that you're more concerned with pips, that's kind of my bigger, that's where I've been struggling with.
Okay, because you don't. So let me see if I can throw something in here that might help you with pips.
Now if I'm on my normal stuff and I'm looking for crosses, right? So I get down here in a cross, I've looked at the longer term, and I'm like, all right, we've hit pretty much a low that we haven't had since 2015, right?
Yep.
So I'm thinking, okay, we got to come up, in my opinion. And it's biased, quite frankly, but I do all my technicals and I do all the support and resistance. So in this area, I'll put a buy in. And then I'm looking, I'm looking here, and then I'll put a buy in, and I'll just let it run. So if it goes down 30, 40 up, but then sometimes that can take a week, that can take 3 days. You know what I mean?
Yeah.
So on the short runs, kind of like when I'm looking for the indicators to help me out with, they're like, okay, I want a 10 pip, I want a 20 pip, I want a 30 pip buy mm-hmm. and out, and I want it to be more successful than what I'm doing now.
Mm-hmm.
And that's yesterday you mentioned that. You said you're looking more at pips versus, profit.
Mm-hmm. Yeah. And the reason why I say pips over profit is because when I place a trade, let's just do a trade in here. Let's just do something small. And when I place a trade in here, what I can do is if I right-click here, the only way that I can actually put a take profit in to where it kicks me out automatically is based upon pips. I can't do it based upon a dollar amount.
Oh, okay, I see what you're saying.
So when I say take pips, I'm looking at more, okay, if I'm looking for this one, here's my resistance level. You might, if you're scalping and you're watching it, don't worry about this take profit location or this. But if you're placing a trade and you have to walk away, I want a stop loss and a take profit in place. Well, at least a stop loss. You don't have to have a take profit if you don't want to, but at least a stop loss in place. But if we look at the take profit, what can we get out of it? So let's look real quick at.
But I'm looking for more of a. I'm hoping the indicators can help me get those. Okay, like what's going to show me in the indicators that what's going to go along with everything else, obviously, but what's going to help me get those 20 pip, 10 to 20 or 10 to 30 pip hits.
So you want the longer trade?
Yeah.
Okay.
Because I don't want to scalp all the time. Because it's, sometimes, I have to work too. So sometimes even when I'm doing this, and I've lost more on this because I'm in it, and then I'm like, okay, you know what, I got to put a quick take profit in here and get out because I got a phone call, and then the next thing you know, I'm on the phone for 30 minutes. And if I don't, I maybe would have hit my profit, and then it bounced back the other way, and now I'm going to lose it.
Gotcha. So let me ask you a question. We've got a trader that works for the company, and he never puts stop loss in, ever, but he never loses. How do you think that's possible?
One, he's got a really big account size. Two, he's trading very small.
Bingo. So that is going to be key. So if you want these larger moves, the issue is we have to give ourselves more breathing room. And in order to give ourselves more breathing room, we're going to have to put, because we don't have as large of accounts as this guy, we're going to have to put our trades, they're going to be in the market for longer, they're going to be more exposed to the market, but we're going to have to put a stop loss at a far enough distance to where it gives it enough room to play around and to come back. Does that make sense? So if we're going to go for longer pips, we're going to focus on increasing our stop loss and ratio, but at least giving it at least 3 or 4 resistance levels to do so. And these larger moves, you might want to move to a different currency. You might want to go to the Great British Pound USD, Great British Pound JPY, because it has the volatility to give you the moves that you're looking for. So if I come down here, we should add this guy. So if I go back to this one, do we create a template for you? No, let's say, is this the design you like right here?
More or less, yeah.
Oh, we did say one. Williams. Okay, we're good. So let's go to Japan. Let's go to the Great British Pound JPY and go down to templates and click on Williams. Wow, is this the one you were using before?
No.
Did I click on something different then? I might have clicked on volume. We may have saved yours as. Okay, let's go back.
I've never used a template. I don't even know what that is.
Okay, so templates, let's go down to save template.
That black and red screen,
Uh-huh.
that's how they were all initially. I had to change them to get them like this.
Okay, so I'm going to create Williams, and this is going to be yours.
I've never saved a template. I don't even know what that is.
Okay, so I'll save this for you. We'll come over here to Great British Pound JPY. I'll right click here, come down to template. Now that this is saved with the correct settings, I'm going to hit this one right here. And I'm going to come back down. What's that?
No, I had to go into every new currency I open. I have to go in and manually change every property setting to make them all look the same.
Gotcha. So here's a quick thing for you. I'm going to get rid of Williams because this is the one that's distorted. So that one, we removed, yes. So that one's no longer there. So anytime you go to any new one, just drop it down to template and hit your with apostrophe S, Williams. This is the market that has the bigger moves. And trading in here, So for instance, this move from here to here was about 120 pips. So your 20 pips that you can get, this market can give it to you. The other way of getting 20 pips is to have a directional move that you're in, and then closing out half of the size and letting the other half have the breathing room of the amount that you're positive. So if you're up 12 pips, put the stop loss at a positive 1 pip, wherever that might be, above or below, and let it just continue on. So I'm going to present a few different ways to you to get that 20 pips, but one of the main ones is playing with a currency that has more volatility. And the Great British Pound JPY is, they call it the dragon because it burns a lot of people.
I've struggled with everything but Euro and Canadian.
Gotcha.
I mean, even the Aussie, everything, I struggle.
Gotcha. They do trade things a little bit differently, so the design, that's why I want you to become familiar with one of these other ones, but if you want the 20 pips on average, 10 to 20 pips, you're probably not going to be the best at the Euro USD, because there's a lot of consolidation to where in a day you might not get 20 pips. Collectively you could get 20 pips if you were to take smaller trades, but not on a general one move direction. So this is the other suggestion I would give you, is to take on a different currency pair. Also, let's go back to green charts, and there was something I was going to set up on here that's going to help you see visually.
Before you do that, on the way I've got my trade charts set up on green charts, the support and resistance, would you add in like these? Would you add anything?
So let me look at here. So where's this?
All I'm using on this particular one, I'm just using the retracement and support and resistance.
Okay. So this retracement right here, I personally probably wouldn't use it. I would probably move this guy a little bit farther down to here. So if this was me, I would adjust this drawing, and I'd come back down to the bottom of this move where it started originally. So maybe somewhere in this range. Let's see if we can yep, so that was the beginning of that upward move before it started to reverse really on itself. So this might be it, and we went to the 50 right there, played on the 50, went down to the 61, right on it, came back up, hit the 50, all of these hit the 50, and then came up above it. So I might move that. Your levels, are the dark blue your support and resistance levels?
Actually, on this particular chart, the green and the dark blue, I don't really remember how I set those up.
Okay.
But they're all supported. The green ones are ones that I've added after the fact.
Okay.
Actually, I think the dark blue no. Yeah, anyway, I don't remember exactly. I know sometimes what I'll do is, like, this morning, when's my trade 12? Like, this one was the one I did this morning.
Yeah, I like that one a lot, this retracement level.
And then I added some extra stuff, because this move right here, the big green move, that was kind of threw off what I was doing yesterday. So when I did this, once I did the retractment, then I came in and I did some extra support and resistance, like this line.
Gotcha.
The top of this one. So I added some more into it before I did my trade this morning.
Okay, nice. One of the reasons why I think this is not going to go above a certain point, 114.605, I think it is because it's the weekly high for the last 2.5 years with the post. And if today we post above that, we're breaking a new high on a post that we haven't done for a while. So I'd be very surprised if we push up above 1.14605, I think it is.
Now, here's a question on the retractment.
Yep.
How do you figure out which way this 100% is? Because on, like, yesterday's trades, the high was at 0%.
Yep. So this is an upward trend that you measured on from the bottom to the top.
Okay.
And now you're going from the top to the bottom, and then it draws that in for you. So if it's just going to be this guy right here, I'm not going to, because this is an upward move, I'm not going to measure him from the top to the bottom because it's going to be upside down. I'm measuring him from the bottom to the top. So if I were to...
Okay. So for this one here, if I started like from this point here to here is a downward trend.
Yep.
But then it starts to go up.
That's what you want.
So I mean, would I run it the other way? Would I run it from like? I mean, it worked out for me today, but I just don't know if I'm starting my retractment tools in the right direction.
No, you're good. So left to right. That's where you want it at. So the very first one on the left side, if there's a lot of candles in between. If it's a single candle like this guy, and it's green, you want to start at the bottom, go to the top. If it's red, you want to start at the top and go to the bottom. So if it was this guy...
So on this one, should I have gone from here, from this high here to this low?
Exactly. So from left to right. And you got that one right. Yep. So yeah, no, you're good there.
So that I know where the 70s, so I know where the 70, 80s are as opposed to the...
Yep, and they're right next to each other.
Because I feel like this... Alright, because I feel like I did this one backwards.
No. Because what you want is you want 0 at the point where the move has stopped. So the upward move has stopped right here. So you want 0 to be there. Because the retracement, this is my first 23% retracement. And it hit, went through, and played on this line. My next one's my 38. My next one's my 50, and this guy sat right on that 50. My next one was my 61. This guy even came down with his candle, almost hit it, or his wick, almost hit it. This guy sat on 50 on this side, and then went down and touched the wick. And this one went through and touched the 70s. So you're right on. Now this was right. From left to right, you're good. Or if it's the same candle, if it's green, it's from bottom to top. If it's red, it's from top to bottom.
So on this one this morning, instead of drawing this, because I drew this morning. So instead of doing this morning, should I have come from here and should I come from here and gone this way?
Yeah. Yep.
Okay. All right. I just want to see if you're all right.
You're good.
Because I mean, it's worked out for me yesterday and today, but sometimes I feel like I might have my 70s, 80s, so I might have it flipped.
Gotcha.
Right.
No, you're good.
Okay.
So one of the things that I wanted to go over was average daily range.
Well, what happened?
Oh, sorry, I clicked on it. Okay.
Oops. All right.
Okay. So a quick way of doing that is if you're over here or whatnot, you can grab it, the little cursor at the bottom, pull it to the left, and kick it to the right, and they'll all just go there.
Okay.
So I want to add average daily range. So which one, do you normally use the green chart one with just like this?
Yeah.
With the slope though? So you change these colors a little bit?
I just did these this morning because these are what you gave me.
Uh-huh.
The 30-minute was the one that you gave me. So since I'm using the 30 and the 60 right now, I just switched those.
Okay. So if I click on that, it turns me back. And so you have this one, and where did we get that from? Exponential moving average. Let's see if that's it. Nope. Analysis TNT slope with EMA. That's it. Okay. So same thing over here. I guess this is TNT slope with EMA. Okay. So I'm going to add an additional study to this. So I'm going to right click, come down to studies. Over here I'm going to go to average daily range, right there. I'm going to add it, and I'm going to move it down because it's ID 20, so I'm going to put it on the 20th row. And then ID 19, max moving average, I'm going to move that down as well. So I'm going to go back to my daily range, and I'm going to go to settings, and I'm going to go to settings here, and it's a 30-day candle. So it kind of throws you off because it says daily, but what it is average candle range, whatever candle it's on. But it's also in chart region 4. So here's, if I move this aside, chart region 1 is this with the TNTs, chart region 2 is this with the major minor, and this is chart region 3. So I'm actually going to add another chart region down below this, and we'll adjust it so it functions better. Subgraphs, I want to change this to black. Hit OK. I do not want to display the study name, and I'm going to hit apply, and OK. And then I hit OK here. And so what you have is it scrunches a lot of these. And so what I'm going to do is I want to take this, and I don't really care about the lines as much as I care about this. So I'm going to grab this guy, I'm going to drop him down. A little bit up above that. And so I have it right down here at the bottom. That's all I really want to see is just that. I want to bring my, well, I'm going to let you adjust these to the sizes you want them. And then we're going to save that. We're going to save that template. So it's across.
I'm just used to everything the way I'm used to everything the way it is.
Gotcha.
Yeah, that's my guy. Alright, what happened? How did all these get moved? Okay.
Alright. So is this where you want these two at? Because these are going to be... I'm going to name this one differently than I named this one.
Oh. Actually, these are a little... Yeah, okay.
Okay, so this is where you like it?
Yeah.
Okay. So I'm going to come down here, go to Studies again, and this one was named TNT Slope with EMA. And I'm also going to put EMA and Average Daily Range, ADR. I'm going to hit Save All. And hit Yes, and now if I want to add the Average Daily Range to the rest of them with this exact template, how it is, they all match up and they line up nicely, I've got it right there, and ADR.
Got it.
And so now I'm looking at my 30-minute, and for the last 30 candles, which is 15 hours, the average has been about 10 pips. And so to be conservative, we generally look for, okay, if I'm going to be placing a trade off of my 30, I generally want to take about half of this. So about a 5-pip trade with my 30, I'm based on my 30 indicator. Because maybe my position's a little bit off, maybe I didn't get in quite where I wanted to, or whatever it might be. So we just take about half to be conservative. And if we move that along, do you want to move this? Do you care if this is the same kind of setup as this?
That's fine.
Okay. So we'll just do that across the board. Analysis. There we go. So for the day, I'm averaging about 70 pips. So if I go back and look at, hey, look at this little candle right here. This is why I'm saying you might not get your 20 pips. Oops, let's click this right here. So from the top to bottom of this one day, it only moved 36. So it was just a sideways day for that one. So sometimes you might not get your 20 pips in a direction. You might have to make that up in small moves because the overall movement in this candle itself was only 36 pips throughout the entire day. So it took an entire day to do that, 36 pips. But down here, it kind of gives us an idea of, okay, for the last month, the average range has been about 70 pips. You know, for the last 30 of these, so about, what is that?
I got it. 30 candles. Every candle's 4 hours, so 30 of those. I got it.
Okay. And so that to me kind of gives me an idea if I'm going to trade off of any of these charts about how much I can expect to get out of it. And then that can also help you with, in here, well, if my range is, only 2 pips to the next resistance or support level, do I really want to take that trade? Because I've already moved that amount within those 2 ranges. And so you delay maybe, and either it's a bounce at that point, or you see if it posts past it, and then you play from there. But so this is how you have it here. Let me set up how I have it to scalp. So when I go to scalp, I have it the same way with these guys.
Okay, wait, before you get on the scalping, I have a question. On
Yes.
the 240, because one issue that I've had, I tried it on the daily chart mainly, where I'd come in right before 2 o'clock in the afternoon when this starts to flip over. I'll look at the direction and I'll say, okay, it looks like, we're going to be in a buy, right? Whatever. And then, based off this, I'll say, okay, I'm going to go in and put a buy in. And I'll let it run overnight for the next day.
Okay.
But but it's never worked out for me.
Gotcha.
So I've been basing it off the candles and off the TNT and these directions, and I'll say, okay, you know what, I'm going to just put in one trade today right at 2 o'clock. As soon as it flips over, what direction we're going, and see if I can get these average, and I would just do the little calculator. And I would say, okay, so for the last couple of days, there's whatever, and I'll go through and I'll do it, but it's never worked out.
Okay. So what I don't like to necessarily take, because like right here, came down and bounced hard. So it was going down, but there's almost no shadow on that guy at all. So from the very beginning, it went up on this whole thing. So what I want to look at is, okay, well, I don't want to anticipate a continuation. I want to have a continuation validated to me. And that happens in these guys over here. So the shorter time periods can kind of give me an idea of, is this going to stay down? Okay, the 30, if it crosses this 21 period exponential moving average, and I'm up above it, I'm in an uptrend. Here's an uptrend. Okay, we've now, down here we were in a downtrend, then all of a sudden we kicked out of that with this last 4 hours, and now we're in an uptrend. We're in an uptrend with a day. So I look at these, and if I start crossing over these, I don't necessarily want to look at the larger time frames and base it off of, okay, we've been moving down, we're just going to continue down. What I want to do is I want to validate with these guys, going back from the smaller time to the larger time, saying, okay, if we're going to continue down for the next 30 minutes, are we looking at that same direction? For the next 60 minutes, are we looking at that same direction? For the next 4 hours, are we looking at the same direction? Because I don't want to be in a trade for longer than, honestly, for longer than 15 minutes, but if I have to, for longer than 2 to 3 hours. And if I'm in a trade for longer than 2 or 3 hours, I might get to the point where, okay, what was I looking at, and has that come undone? So was my 240, was that up? And then when I saw it was up, and these guys kind of changed directions and moved, and my 240 eventually kind of folded and kind of came down on itself. And so just because the 240 says it's up doesn't mean these guys can't continue to move that. It's just where the image is right this moment, and this is what it looks like at this very second. But I want to validate that, okay, am I still continuing with my 30? Am I still continuing with my 60? Well, yeah, if my 240 is up, it's just telling me that that's where it's looking to go, and my 30 and my 60 are confirming that, so I want to take a buy. So the overall direction of the larger chart.
Yeah, I'm not good at that. I've done that so many times with figure. Same exact thing. And then an hour into it, these two just take a big dive.
Well, also you have to know, you have to ask, how long have they been overbought? If this is up here, these guys are going to be overbought for a while. And if they're overbought for a while, well, can they continue to buy, or do they have to give something back right now? And so if they've been up in this area and they're stale in this area, I'm not looking for another buy. I'm looking for potential.
I haven't been, that's a good point. I haven't been paying attention to the duration they've been up there.
Okay.
Okay, but here's what I was trying to do. I'm trying to figure out, because obviously I can't sit in front of my computer, forever in a day. So what I'm really kind of trying to figure out on more of the day charts is I'm trying to get in on some of these, right in these areas. Or here.
Okay.
Or here, get in here, get out. You know what I mean? I'm looking for potentially some really big moves. So I'm looking to say, okay, here's a cross, here's a good cross from you, moving down, whatever. I want to get into it, and even if it takes a week, I want to take some advantage of some of these really big $200-300 $300 point movements.
Oh yeah.
But when I'm in here, and I've tried it on a daily basis, like even here or getting in here in this area,
Mm-hmm.
based off of these, I've never been able to make that happen because it'll end up, for whatever reason, if I got in here,
Mm-hmm.
these candles wouldn't have gone that way. They would have been down here.
Gotcha. So if you want to start on a trend, the only way to figure out, I mean, along with your indicators that you're seeing on yours, over here, you've got your 21 and your 7, is that right?
20 and 7, yeah.
And are these exponential or are these simple?
Exponential.
Okay. So you got a 7 and you got a 20, and this is just candle, right?
Yeah.
Okay. So 7 and a 20 candle, exponential moving average. And these are awesome where you start to see them kick over. And you see the movements based upon that. So this is one way of seeing it here. The way that we see it over here is we have a 21. So kind of the bigger one here, not quite this smaller one, but you can add those in here. So here's the 21 right there. And if you want to move it to the 20, we can move it to the 20.
No, that's fine.
But you know as well as I do, when we're looking at this right here, the candles will kind of use these as, support and resistance levels. And then when they cross that, you see the trend change. And then when they kind of came up, it kind of poked back down. But then when it crossed it, you had some up movement. When it crossed it, you had some down movement. When it crossed it, you had some up movement. When it crossed it, you had some down movement. So crossing with your candles is going to be also another indicator you can look at here. And that's what we look at over here. So when I'm here, I'm up. I'm up. I've just gone up. I've crossed this with my 240, so I've gone up significantly. I'm still up with my 1 day. So let's go back in history and just get like an example of a different time. Right here. I'm up. I'm bouncing on this. I'm up still. I've come through on this one, so I was down below it. Now I broke through it and posted above it. Now I'm up. And for some reason my 1 day doesn't have enough data to give me a 30. So, and then right here, I'm down, I'm down, I'm down, I'm down, and I broke through it on my day. That's a big one, breaking through on the day. That takes a lot of effort. But here, the 240 came up to it, touched it 1, 2, 3, 4, 5 wicks above this, but pushed away from it. And so, if we want to see trend, and we want to be able to see the beginning of a trend, we have to look at these exponential moving averages as the key to when that happens. So if I'm back over here, well, if we're looking at where it crossed the red right here, kind of play with it, but it stayed above it, and it still stayed above it. And if you would have had this post and kind of let it happen here, if it went down, you kind of give it a little bit of time to see what happens for the next little bit, because we're not seeing a whole lot of movements. It's kind of sideways movement in our exponential moving averages across the board. They're kind of sideways. Then we come back out of that, we could be in this nice trend. I'm above the red line, still above the red line, bouncing on the red line, and I'm going, and I guess what? I posted past the red line right here. Now I take a sell, and I'm going down and bouncing the red line again, coming away from the red line, touching the red line, coming away from it, touching the red line, coming away from it, and I go through it. So you can see utilizing.
But that's what I'm trying to.
crosses.
That's what I'm trying to. I can see it here.
Yes.
But I can't figure. I mean, time frames, everything else. I'm having a hard time doing it with the indicators, because a lot of times, by the time I see it here, I'm in and out. I'm not in front of my computer every 4 hours.
Yeah.
So by the time I see it, we're kind of at this point. I'm already here.
Yeah.
And I'm like, okay, well, I don't have the luxury of seeing all this stuff. So I'm here. I'm way above the line here. So I'm like, oh, well, if I get in here, it's risky.
Yep.
Because for all I know, it could pop down. You know what I mean?
Uh-huh.
So I'm trying to figure out how to use the indicators to help me get in at these points.
Okay. So let's say we were right here. Let's take this time frame right now. So 627 at 16. 627.16. Okay, let's go back to that date. So we were right in this range, in this direction. So we were somewhere in this range. So we were moving up. Let's go back to that and see exactly. So this is a 1 hour or 4 hour? It's 4 hour. So that's the third large 4 hour candle right there. Let's look and see what the indicators are telling us. So here's 1, 2, and here's our third one. And what I'm seeing here is we have all this move up, as you're seeing across the board. And we're not really, I mean, when the sell happens, so see the red where it starts to come down, the red here. When these selling signals happen, these selling cycles, we're not getting any selling. We're going right back to buying, and we're doing strong buying. So here we're starting a selling cycle in reality, but what's going to happen? We've got that retracement, that's part of the selling cycle right there of this, but we still are very strong up. And if I'm looking at this major right here, I have the red pointed up and the green pointed down. There is no conviction right there. And even if I look at the previous candle, the same image was here. I've got the gray pointed down and the black pointed up. I mean, it's even saying maybe we're going to continue up. It's not convinced that we're crossing, coming back down. This right here with the green and the red, this is generally a continuation pattern that you're seeing where it's aimed up and it's still open. So the previous candle stopped right here. The next candle opened up and was still aiming up. Our miners are hiccuping. They're not quite sure. They think this might continue. We still are strong up here with our 1 hour. We might be up here, but we're not convinced of coming out of this because these guys are still staying very close to the top. And as we move forward, I got a hiccup, and these guys are undecided as well. Again, so they were undecided before, one down, one up, and again, one down, one up. Or not really up, but sideways. So they haven't agreed. They're pretty much just barely touching right here. So there's still no acceptance. And as we move forward, we might get, well, there's another candle there. There's another candle there. These guys are still strong up. I have very strong pressure here. I got some sideways movement in here, and so these guys kind of dipped out of it, but look at the selling cycle. The selling cycle gave me nothing almost. And so let's continue forward. Alright, we're kind of plateauing out. We're kind of shrinking the size of these. So there's got to be something giving back here in a little bit because we've been plateauing just a bit. And as we move forward, we got another big strong move up. And this one was conflicted between the two when it ended. So big, huge, tall thing, and then it came back down and sat here because they were kind of not quite in agreement at the very end of that 4 hours. And now we have a downtrend. But the whole time, I didn't see a single thing in this 240 that told me they were going to stop. Not there. This was a very strong move to begin with. And we already broke other levels and resistance from before. And as I go forward, it's still up. It's still not convinced to do anything besides up. Very strong pressure. Green's still on top. Green finally crossed. So we're now looking, okay, we're going to be selling, and it's going to happen in the next few candles. So let's take that look. It's not there. There we go. We got some sell. But it drove it right back up. So relieved the pressure in order to get back down out of the channel, and now we can continue back up here. So we may have been pretty stale up here in the channel, but at the same time the move was so strong that it wasn't kicking out. So that's what I kind of look for. What is telling me that it's going to kick out of this? And if I'm not seeing it, then why trade against this? Because it's such a strong move up. Unless I'm up against a very, very strong support or resistance level, I'm not trading against that. And because I'm so far away from my average, average daily, or my exponential moving average, I know this is a super strong trend. And for me to break out of this and to change directions, I've got to cross this. And we haven't done it. and we move forward.
So, okay. So I guess what I'm saying, though, is, I mean, I get that when I have the luxury of going through and say, okay, but what if you're thinking about doing a buy right here? Like, you don't have the luxury of going forward to see what's going to happen next.
True. And in this situation, I don't like it because I see my minors have crossed. They're getting close to channel, and that to me is a little bit too much. So I wouldn't take a continued buy on this right here, at least in the short term, until these guys turn back around, let's move forward in the 1 hour. So I see it come down. I'm not seeing any buys there. I'm seeing it come down. I'm not seeing any buys there. Maybe the 30 had a little bit of buy because of the minors. As I come across,
So you're waiting, so there's another couple hours go by.
I want to get good positioning again because these guys, the smaller guys, didn't tell me that this was going to continue. They're saying, hey, it's changing. And as they get closer and closer to this level, eventually they're going to push through that level, and that's going to be a first signal that, hey, these guys have potential to move this upward trend and have the 240 come down. So we can just keep continuing.
Okay, so,
go ahead.
So going back to my original question, what I'm looking for the indicators to tell me when to get in, like at these points, somewhere closer to these crosses, as opposed to me checking the computer when I see it. I'm here, maybe I'm here, and then for whatever reason, as an example, the first time I look at it, I'm here, I'm saying, okay, well, I don't really know if this is going to continue down or what, right? But then here, and then, but I don't have the luxury then. So wait, let me go back. Let me make this simple. So the first time I look at it, I'm right in this area, okay? And I don't have the luxury of seeing anything on the right-hand side.
Yep.
So I'm thinking, okay, looking at this, okay, this might actually be a downtrend. So I don't touch it, right? I'm saying, God, I wish I would have known I could have got in here or here. But I didn't. So now I'm here, so what do I do? Next time I look at it, I'm way over here. So I've missed everything in between.
Yep.
So I'm trying to figure out how to use the indicators to help me get in at these crosses. Even if I have to leave it in there for a day, make very smaller trades, but I want to take advantage of 100, 200 to get moved.
Yeah.
So I'm trying to figure out how to use the indicators. I understand what you're saying on the indicators where, there's a big gap like what we were just talking about, but I'm talking real time. I don't have the luxury of seeing what happens next.
Okay. So in that scenario, I'm going to bring up the 30 minutes. Okay, this guy. Okay, we're good. So what I'm going to do is I'm going to drag this back. Let's go back here. Because I don't want to see stuff. I want to look at it and go through it. So let's hit replay. I'm not going to replay just a single chart. I'm going to replay all charts. Or actually, let's replay those that are linked. Because maybe not all of them are linked. Are these linked?
It doesn't matter. You can.
So they're all linked. Okay. So charts with the same link number. And you can separate them by link numbers. If you want all your trades to be at a different link number, we can do that. But I'm going to change this, and because I have a 30-minute as my smallest, so 30 minutes, this would make that 30-minute change every 1 minute. But if I increase that, that'll change it in 30 seconds, that'll change it in 15 seconds, and this will change it in 7.5 seconds. So I've got 7.5 seconds here, I've got 15 seconds here, and then I've got 1 minute for this. And the day has
not enough data.
6 minutes. Yeah, so I can add more data if I want to on this one.
Got it.
But with this we can just hit, let's add the data before we do this. So, chart settings, I want to go back at least 300 days. Okay, so now I've caught up with these guys. So what I'm going to do is I'm going to take the 240, and it's going to take me 6 minutes to get through a day. So I can hit play, and it'll go from this very point. It's going to take a little bit of time because I have all of these. But I'm also going to click this little skip button, and I'm going to hit pause, and then play again, and I'm going to remove this from the screen. And, or just drag it to the side. So let's go back to that replay. Let's bring him up here, out of the way, just so I have the pause in the stop area. So if I want to pause something, okay, so I'm down, this is coming down, we just broke the 21 candle moving average. We're down on the 240, or the 1 day. This guy's kind of sitting down here, so right now I'm in a downtrend across the board, there, here, and here. Well, let's look to see where a potential cross is going to be, and again, it's going to be up here, but I want to verify that when this crosses this, that so does the 60, and then the 240 is also aiming at that same direction. And that's kind of my signal. The indicators themselves give me what's happening this very, very second. They don't give me what's going to happen for these super long trends. I can learn from this replay. Okay, if this posts above that, which it didn't, it pushed up against it. Again, very strong. Maybe I get a post here above this. Nope. Oh, barely. And so we're going to look for our 60.
240 just. Oh, so I haven't posted yet.
So, and it went down. So it tried, but it stopped, and it got pushed back. So I'm not going to be out of this downward trend yet. And so to find the downward trend, I have to have the 30, verify it. I have to have the 60 as well, verify it, and post above it, which would then give me confidence the 240 is. And if the 240 finally does, yeah, I'm 4 hours in the move, but I could be making profit on those moves the whole time up because I knew where the 30's at, if it's in the oversold or the overbought area. And I knew that, okay, well, if it's down here and it's trying to push up against this line, you generally get pushed back. And you come up to it, and then you push away from it. You come up and try to touch it, and it pushes away. You come up and try to touch it, and then it pushes it away. And so these other smaller time frames can benefit these larger time frames because I'm still pushing away from that. I'm not seeing anything that's going to give me an upward signal in this scenario. Alright, now we're changing directions here. I was down, let me pause real quick. I've been down in the oversold area for a while, and now I'm coming up. And is this going to be, I'm very strong down here, very strong down here and here. So again, downward trend on all of these guys. My 21 verifies that. But is this going to be the bottom? Let's look to see if this is going to be the bottom. And what tells me is the bottom is this is going to kick over. But if I had, let me pause. Let me duplicate this 30 right here. Oh, you got a 15 right there. So let's bring the 15 into play. Let's move him over this candle setup right here. Because this guy's gonna signal to me first that we're crossing this. Then if this verifies the signal and then this verifies the signal, I'm just seeing each one of these tell me what the smaller time frame told me faster, in a faster manner. And then we move across, and so it's like, okay, well, if these do, and they're now moving this and it's starting to move up, what I'm going to look for is for the 240 at least to come up to this line. And I know that that's probably my next resistance level is this line. So I'm using my indicators. Am I in a buying cycle? I'm just starting the beginning of a buying cycle right now. And then I'm down here. I'm completely been sold out with my not quite completely. It needs to be 100, but I'm down here at the bottom, so I can have both of these turn. These are my oranges, my blues that turned previously. They anticipated this one a little bit sooner as a buy, and so this cycle, what I look for is it going to come up and touch this guy here? Is it going to reach up to that? And so I want to see this turn, this turn, this turn, and then I'll go for that. So I hit play, and it comes up and pushes against it, pushes right back. So I'm not going to get it in the next little few hours. Okay, it pushes up against it. Is my 30 going to post past that? And it did. Oh no, dang it. Okay, let's attempt it one more time. I'm going to push past my 30 because my 15 went over. I'm going with my 15. My 30 posted, but I'm not going to push back down against that. Yep, I'm not out there quite yet. And so I haven't changed the overall trend because I pushed up on my 15, came back down. Pushed my 30, came back down.
So you're looking for 15, 30, and 60 to post above it.
And then the next move that I have is, see right over here, let me pause this guy. my 240 did exactly what I said. It came up and tested its limits. It got to its limit and pushed back. So in this buying cycle that we saw here and here, it went through it. And it, it moved a decent amount. So let's take a measurement on this guy. Let's just say we took it from the very start of this and it moved up. We got 11 pips. It's nothing huge, but we had 11 pips on this.
I got
that. But as we continue forward,
but essentially what you're looking for, you're looking for the 15, 30, and 60 to post above it, and then we look at the 240 to see where they're at.
Yeah.
To see if that's the indication of the new trend.
Yep. And right here, I have a huge validating signal that I'm not buying right now, and you have every single one of these arched down, and they're very tight and strong together. So I've got a very strong move coming down right now. And how much further can this go? Well, support and resistance would help with us that. And so we can draw that in on this guy over here, and we can see where these lines line up. So you can pause it, come in here to maybe change this to maybe a 240 instead of a 30. Put your support and resistance lines on your 240 because usually they're a little bit cleaner. Watch the 240, watch the retracement, hit the play, and see how it works. And then do it again. And keep pausing it because the only way to learn how these interact is to fast forward through it like this in a fast manner. And so I would like over the weekend for you to use this replay button.
Okay. Yeah, I did yesterday, and okay. But again, in order for me to find what I'm really looking for here is to find these points.
Yep.
Right.
Yep.
Is to because again, this is the luxury of going back and seeing over time. But in real time, what I'm looking for, every hour, I'm looking for something to post above this blue line.
Yep. And
then I'm looking for validation for the 1530 to post above it. Because obviously I can't sit here and, can't watch your computer all the time. So I'm looking for every hour I check in or whatever, I'm looking for a post above the blue line.
Yeah.
If this post above the blue line, then I want validation between the 1530 and then I want to see where this one's posting, right?
Yep. And that's the indicators teaching us this. The other part, the technical, is your lower lows, lower highs, higher lows. That will also give us a key on trend and when we're going to change directions as we're seeing over here. So as we were coming down, we were creating, this was a kind of an anomaly that happened, and so we didn't create any newer highs from this point, we created newer lows, and so this wasn't the change because of these abnormal announcement candles. But we came back down, created another lower low right here, or lower high, a lower low, and then over here, well, if this is the new lower high, I didn't create a new lower low. I'm not getting that, and so now am I changing from a downward trend to now an upward trend? And if I can identify these and then have that be verified with my my exponential moving averages, and then have that verified over here with my indicators as to, okay, where are these at, and am I going to be in good position right now? And maybe my 15 is above that, my 30, but my 60 is still playing on that line. Well, once my 60 pops, maybe that's the one I'm looking for.
Okay, but how would you know, I guess, again, because we have the luxury of seeing what happens next.
Yep.
But let's assume this is the end of our, we're right here. We're right here. Okay? So we started looking at the left-hand side, we started in a downward trend, and we kind of came up a little bit. Then all of a sudden where are we here? The next 4 hours post, and now we're on this one.
Yep.
So it looks like, without having the luxury of looking at anything on the right, they cross. This could be an indication of an upward move.
Correct.
Right? Same thing is here. It could be one of these candles on this side.
Yep.
So for all I know, at this point, they just crossed. We were in a downtrend. We were in and up. We kind of came down a little bit. Now from here to here, it starts to look like it's going up again. Then we get this big candle. For all intents and purposes, this looks like a cross. So this could
Yeah. So one of the things that I want to look at is, okay, I still want to watch and make sure if I'm trying to get a 100 pip thing that I use certain tools. So maybe a manual stop or manual trailing stop or a trailing stop. So if it comes back against me, I can get out of that. So we want certain things in place if we're going for these longer moves. The other thing we want to look at is, okay, what caused these? I want to go to not just my technical analysis, but now my fundamental analysis. So this is the 614.
So we're just looking to see if there's any news, anything like that, right?
Yep, we want to see if this was caused by something other than emotion. Because if there was a true reason for this to do what it's doing without the emotion of an announcement, then okay, maybe I'll accept it. And so I'm going to look at these next 3 candles as to, okay, what's going to happen in this 12 hours that potentially can happen. So let's take a look at this one. We've got.
Well, that's okay. I get what you're saying. So, but I'm saying you wouldn't jump in it. You wouldn't jump in when they crossed it. You're going to still wait another 12 hours.
Well, I would do my fundamentals and know that red 12 hours was an announcement. I think it was Janet Yellen speaking. So I know that the market drives things up just to drive it back down because there might be something that's positive. So I know the big boys out there, they don't want to break out of certain ranges. They like to stay in certain areas, and because of that, they'll move something up. So for instance, over here, this move right here, there was nothing in this move right here, or was that one? No, it wasn't quite that one. It was. Let's go to the 1 hour. I can see it better than the 1 hour. 1 sec. Yep, so this move right here. This entire move, there wasn't a single bit of news or anything else that caused this. There was no announcement, and for it to, I mean, this range right here is the average move of the market. This is normal movement. I mean, even this was an announcement right here, so you saw some abnormal stuff. But over here, when we started doing this, there was nothing that validated that this move was going to do this direction, except for Janet Yellen speaking right here. And as soon as this happened, it drove it right back down, pretty much to the same price that we started at. So what will happen is you have institutions that are large enough that want to keep the price in this range, and so they will do a preemptive move in that direction to soften the anticipated news that should be beneficial to the United States versus the euro, and it brings it back down pretty much to the same level and then pops it back up. So we're kind of in the same level as we were when we first started this upward move. And so when I look at these, I want to know why. It's not just what's causing this, like what's going on. You also need to understand if there's nothing that can validate this upward move, look to the next few days of your announcements. What's in there that might be significant enough that big institutions will drive the market up to push it outside of the norm, like we saw here, so that when the blow happens with the announcement that it's softened, and it just brings us back to where we started, the exponential move right there. So that's another thing you want to look at, because there's 2 sides of this coin. You have a group that full-on wholeheartedly believes in fundamentals, and you have a group that full-on wholeheartedly believes in technicals. And both are good. Both serve their purpose. Technicals can't teach me everything. They can give me some good stuff, but also I have the fundamentals, my announcements, and other things that will throw off my technicals all the time.
But basically, so you're saying, I guess what I'm looking at is, like in this area, here's a good cross.
Mm-hmm.
So, but again, I don't have the luxury of seeing what's on the right-hand side of this.
Yes.
So I'm anticipating what could or couldn't happen with a speech that's going to come up in 6 hours.
So this was not a speech, but this was actually this morning. It was 4 straight announcements that have no, like it was like they weren't expected, but they were. You couldn't determine them.
Well, I understand that, but I'm saying if I'm here,
mm-hmm.
and I know those announcements are coming up, but you know what I mean. And they cross, so I'm crossing here.
Mm-hmm.
But I don't have the luxury of knowing how these announcements are going to affect the market.
Yeah. So
I mean, I can't really base anything on that because I have no idea.
But you can base it on your technicals a little bit. So if we go back to, so we have a higher high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and then we piddled out. So right when I saw this last night, because I have some sell trades in that are from back in this range, when I saw this last night, I hedged. And I rode this all the way up to when I closed out my position this morning. I was at, I took it at 114.60. So I took the profit. I closed the hedge out right at pretty much where this line is, 1.4 pips below this line. So I rode that whole, I think it was 50 something pips. So no, it was, what is that? Yeah, 50.3 pips I ran this thing for. And that whole upward movement I took because I realized with my technicals back here that I'm not seeing it. And then I started watching my indicators and started saying, hey, the selling cycles really aren't pushing this far enough down, and it's continuing to creep up. So there was also a pendant that was happening. So let's go back. Let's change this property so I can take the auto scroll off. And let's hit OK. So if I go back just a little bit.
Oh my God, I was trying to figure out how to do that.
Gotcha. And I'm in this range. I was looking at this last night with another student, and what I did was I drew in a few lines. So I got a line up here, and I drew, I think, it right. Oh, where did that line go? So I have to hold it down, I guess. So from here to right about here was my line, and I drew one from the bottom here, and I believe it was, oops, not that, another line. I drew a pendant for the guy from here, and I think it was the bottom of this guy, or somewhere in this range. And I was like, okay, and maybe it was the bottom of this guy and the top of this, or something like that. Actually, that was it. Let's undo those guys. Objects list. Trend line. Let's delete. Okay, so let's do another trend line. It was from here, and it was the top of this one. Top of this green one, I think it was. And then from here, I did another trend line, and I did from the bottom of this one. And because I knew there was a pendant, and it didn't break out. I know, to the sell side. So it was a further one than I was looking at. So I'm like, okay, well, we have a pendant. We don't have higher highs. We don't have lower lows. We're just coming into this, this bottleneck. And when we break out, that to me is going to signify that I'm moving in a different direction. So as I move forward, I broke out here. So I placed my hedge at right above 104, right below 104 at, so 104.097. So about 10 pips above 104, so right in this range. Because I wanted a confident breakout. So that guy was it right there. And if I throw on here, let's do this guy. The data window. I don't want him that big. It's going to be that big either. So if I go to this one right here, my high was 148.3. My close was 148.0. And so after that happened and it posted the next candle, I took a buy. Yeah, it went against me for a little bit, but I was hedged off of the trades I had before. And I let this thing just do its course, because I knew that we broke out of this trend and we weren't creating any new lows.
Yeah.
So
you're looking, but that's where you're seeing it, right?
Yeah, right there. And the very next candle I move over, oops, that's way too much. I can't do one candle at a time. No. So if I'm going to drag this over just a little bit, I just saw one more candle. So I saw that and it broke. And so the next candle, I put a hedge in this one. And yeah, it came back down on me, which is fine.
But you waited till the next candle posted? Or you waited till the next candle started?
I waited for this candle to post in a confident post. So in the next candle,
Okay.
I took my
Gotcha.
hedge.
Right.
And at this point, what I had to do in order for me to continue down, I had to break this level. So here's a level that I had to break, right here. And so as I moved to the right,
in order for you to get out or hedge it or what?
in order for me to realize this hedge was incorrect.
I gotcha. Okay.
So as I moved forward, I never even got to the other line that I was looking at. So I had two places possible. The other bottom that we saw was right there. So I touched on it, sat on it, pierced it, and moved away from it. So as I had these two lines, and I put these in my, there's an app you can get. It's a fantastic little app.
Okay, that's what you're going to ask you again.
Call levels. It's called Call Levels.
Okay.
I put certain levels in there to where when it hits that level, it notifies me and tells me,
Okay, that's awesome.
Yeah.
That's what I was going to ask you for next. Like,
Yeah.
is there any algorithms or anything you can do to set up alerts?
Yeah. So the one that I did,
Okay.
I put these two down here. Then the other one that I wanted was above this level, so I went to 124 or 114.24. So let's click on this guy, and I went to 114.24. So right in this range, because I wanted to be high enough above these guys right here, but a wick that wouldn't really reach it, and so I wanted it, and I really, like the wick got it on this one, but I knew if I get to this range, and I look at it, because at least it's going to warn me, but if I look at it, and I can get a post above this level, right here, I can post, because I stay below it on this candle, and so I was kind of unsure. This is the middle of the night almost, so I'm unsure, but I hit this ding, and now I know at least this announcement's telling me that that original hedge is in good position. It's in a good area where I don't have to worry about it. And so as I move across again, it went away from it for a bit, but it never came down and created any lower low, and never announced this one or announced this one after I'd put those in after this. So I would have had an announcement on either one of these. I got the one up on here, which was clear above this guy. I looked to see if there was a level that it broke. It didn't quite break that level, that lower high that was created. But I am creating, from this point here, I'm creating a higher high or an equal high, so I already know that something's off. Something's not, I'm not in the downtrend that I thought I was going to be in. And so I moved out of it. And then this morning, I was very, very attentive. I had my hedge in an open position, or in a closed position. So I had the window open for me to close it out if I needed to. Because if that announcement came in this morning, and so we jumped back to my announcements.
I saw them. I looked at them this
So
morning.
all four were
Where
red. They were all against the U.S. dollar. So with all four being red, I let that go, and
go back. How do you know they're against?
So right here, I go to, so do you have it in your bookmarks?
Well, I use...
There we go. That's it. Yep, so go to Forex Factory. Yep, so this morning we had all four of these, and they were U.S. announcements for the U.S. currency.
So red, they're against it.
So the forecast that was supposed to be the idea versus the previous, so the forecast was this, and the actual was on every single one was red. Therefore, that is negative news for this currency pair, the USD. So if I go back here, negative news is going to make the euro more expensive, so this price is going to go up. So, and I walked through that in my mind. I visualized it a few different times. Okay, well, what if there's 3 out of 4? That's still going to create a bias in the buy on this. If there's 3 red out of the 4, okay, what's going to happen if there's an even 2 and 2? Okay, it's going to kind of maybe go up, go down, and piddle around. Okay, what if there's 3 green out of those 4? Well, I'm going to have most likely a sell at that point because it's favoring the U.S. dollar. And if they're all green, I'm going to have a stronger sell. So I played those scenarios out in my mind. I visualized them to make sure that when I took the action, it was correct. One of the things that I wish I would have done was not just have the position open to close that hedge, but have a position open to add additional buys.
Okay.
So that was the other thing that I wish I would have looked at and gotten on top of, but I didn't. But still, I managed to do fairly well with that. So no complaints. And I closed it out at 160, which is about 3 pips below where it's at right now. About 4 pips below right there. So I let it ride. I waited for the market to turn. I didn't take the initial first few turns. If we go back to here and turn this into a 15, I waited for the 15 to really give me a red candle. And where are we at? So I waited for the 15 to give me a red candle, and it started giving me a red candle right here, and so I got out.
Okay.
Because I had a full 15 buy, another 15 buy. I didn't get out of the high, which was unfortunate, but it came back down, and my next candle started moving down. So I was like, okay, this might be the retracement in the 15 that I'm going to signal that I'm getting out in. So that's where I got out at.
Okay.
But technicals, fundamentals, as here, I had my call levels in place that would notify me on top and on bottom. I knew if certain places were posted past, we would continue down. If certain places were posted past, we'd most likely continue up. And so I had all those things in place to make sure that this hedge that I was in was going to move in my direction. So, very lengthy explanation, but that's how I rode this morning's hedge up and made 50.3 pips on that. So, but I was poised for that hedge to go negative against me. I did get in, right around the 109, so just right below here. So my level that I got in was 109, or sorry, not. So 097 is where I got in, so right about here. So I knew I had a little bit of room before that announcement happened, that if it goes against me, I can still close that out positive if the trades are not in my favor. And so, yeah.
Is there anything on the notifications that will notify me when my moving averages cross?
That might have to be an expert advisor that you build. That's not going to be something that I believe is here.
Okay, I was just curious if there was anything out there.
No, I understand. It'd be a good one to get, though.
Yeah. Okay. All right, no, that helps. That kind of gives me a lot of information, but slowly. Okay, yeah, because that's one thing I'm trying to get better at, is taking advantage of the bigger moves.
Yeah.
Like, oops, what happened here?
Oh.
Okay, so even in here, you know what I mean? Like, even if it's daily, like, I'm trying to get in some of these and write them out.
Gotcha.
Even if I have to leave them open, for a long time. I'm trying to get in some of these over here, some of, I know that was probably a big announcement, but the point is, like, I'm trying to get in some of these crosses, even to take occasionally some of these bigger moves.
Gotcha. And for some reason, I'm trying to reconnect again, so I don't have connectivity.
Oh, you lost me. Okay.
I still.
Anyway, but I mean,
I don't see where you're.
I mean, you get the point.
Yeah.
Okay, so I mean, I switched back to the hour daily charts. Like, I'm just trying to get even if I stay in it a week or whatever. Like, I'm trying to get it. Because some of these moves, even on the daily or 4-hour charts, and they may go 200-300 pips, but it may take a month. It may take a week.
Yeah.
But I'm trying to get better at taking advantage of those on a regular basis. So what you just told me helps, because my crosses are very good indicators of that, the 7 and 20. For me, I mean, they work for me. They're probably the two best moving averages I've been able to come up with that are pretty accurate on the 4-hour, 1 hour, and 30.
No, they're fantastic, and you can see where there's benefit to them.
So that's it. So yeah, I'm trying to figure out when to get in. When, as opposed to me just being locked out of my computer 24 hours a day.
Gotcha.
Okay,
So
so
maybe,
everything told me did help.
Maybe we look at an expert advisor.
Well, that helped. I mean, what you told me helped, and I got to figure out how to get the indicators to help me kind of get to that point to where I'm cross-referencing, because I'm still, it's time-consuming and kind of, I feel like it's iffy when I go back and forth between the indicators on their time and the trading platform on its time, like trying to match them up.
Gotcha.
But no, the stuff you just told me helps. Okay. Because now I'm going to go back to it and replay and kind of see, because I think we're in more of an uptrend now, but we might be coming down again.
Mm-hmm.
So I'm going to kind of play with it and see if I can get that crossing point to when it comes back down. Okay. All right, so recap what you want me to do over the weekend again, so I know.
Okay, so I want you to use the replay button
okay.
and hit pause, go through your technical analysis. And if you want to, it might be a little overkill, but you can actually look at your fundamentals as well. You can go back to announcement and go to past dates where you're at, and look at if anything's coming up. And you can say, okay, well, this announcement's coming up. Let's anticipate that. But also, if something moves beforehand, well, why did that move without anything that I'm seeing here or in my technicals? What caused this? And so trying to analyze both technical and fundamental and kind of bring it down to where you know why the market's moving. And that should help you with that replay button, kind of getting more used to seeing the indicators in play and not just sitting here playing live time. Because if you can sit in front of your desktop or laptop for 2 hours and you're playing with your live trades, that's just 2 single candles for the hour, where I can now have in this replay every 15 minutes, every 30 seconds you have 2 candles. And so 4 hours every minute, so you got 120 minutes in 2 hours. That's 480 candles, 1 hour candles you can go through in the replay versus the 2 hours you'd go through in live time. So
no, I get that, but I'm still having a hard time.
Yeah.
I'm just still having a hard time because I get the replay, I get looking at past technicals, but I also have the luxury of knowing what happens next.
Yeah. So so if you know what happens next, go to a different currency pair. But even
if I hit replay, I'm still going to know what happens next.
But how do you know what happens next in that replay?
What do you mean?
So if you grab your little cursor at the bottom and you scroll that just some random place to the left, you don't know where it's at, and you just hit replay, you don't know what the next candles are going to be. So
I see what you're saying.
You want to remove the bias from yourself.
Yeah, okay.
So that's the main homework, the replay button. Get used to it.
Okay.
This is the part that takes time. The indicators are not the easiest part of the whole thing. They are the most difficult part of the whole thing. That's why I'm trying to put more time into the indicators and reading the indicators and trying to get through those fundamentals. So
yesterday was the best scalping day I've ever had in practice.
Keep that program going. Don't drop it. Adjust it. If it doesn't start working for you a little bit, tweak it. Say, okay, well, let me look at this and throw this in here. Okay, that didn't work. Let me look at this and throw this in there. Or let me remove this because that doesn't seem like it's benefiting me. Go back and analyze it and make it better for yourself. Don't just take something that's working and doing well and get rid of it.
No, I'm not. Yesterday was, like I said, I really only lost one trade because I ended up hedging the other one, and that particular trade, I stopped it, but I hedged it during the trade, and I still ended up with a positive. hit value.
Nice.
So I mean, I really like 1 out of 12 yesterday. I lost.
Nice.
Never ever had results like that before.
Well, you're looking at. I mean, 11 divided by 12. You're at a 91.66 repeating percentage.
Yeah, I mean that was so. If I can, I mean, so I'm happy with. I mean, yeah. I mean, whether I'm funding your account or my account or just going forward, I mean, that's, to me, I'm thrilled with that. Okay. And that's on one currency when I'm just getting used to it. So
perfect.
If I can duplicate that, then I'm a really happy guy.
Nice.
But yeah, okay. So that's where I'm trying to get, where I can do that. Plus, I can have these longer moves going.
Okay.
Because that's obviously for everything involved in that kind of the goal, right?
Mm-hmm. Yeah.
To be able to take the 5, like what Hiram said, our goal is to be able to predict the market, to take the 3 points, 5 points, 10 points, but also be able to take these bigger chunks.
Yep. So I can teach you a lot of the scalping, a lot of the longer trends in a way. There's another coach out there that I've kind of gleaned from, and he teaches pending trades. So once there's a conviction within a move, he then has the exact point where he wants to get in on a pending trade, and it activates there. So there's other styles that I'm also going to help you with to give you some more tools to play with. But the one thing that I wanted to mention was the scalpers in the Euro US usually do better. And the reason being is there's a lot of consolidation. There's a lot of sideways movement. And when I'm in sideways movement, I'm not using my long swing trading styles. I'm using my scalping styles. When I'm looking, I'm in trades, I'm in some sell trades, so I had to be in a hedge. No matter what, I had to be in that hedge for that announcement. And so I wanted to watch that announcement. Normally we do not trade announcements unless you're in a trade that you have to be in the announcement. And the main thing is be hedged when you're in those announcements. So I'm actually going to add a few more rules to your live trades, and it's going to be never trade an announcement, and if you have to be in an announcement, you're hedged. And then you adjust accordingly after the announcement comes out. But one of the other things I want to do for the homework is I want to ask you the replay button, but I also want you to go through the coaching checklist. So the topics, the coaching topic checklist. I want you to choose 1 or 2 topics in there that you feel you want more information about, and I want you to post that on Slack so that next time we go over that.
Wait, say that again?
So
your coaching, say that again.
Yeah, so the coaching checklist, the coaching topic checklist, I want you to go through that and label at least 2 to 4 different topics from there that you want me to focus on next time. So that I know that okay, well, these are the things he wants to learn or look at right now, and I can approach those. Because next time, let's see where we're at. It's Monday at 8 or 9 o'clock or 7 o'clock your time to 8 o'clock your time, and then they're just 1 hour sessions from here on out. So. The front-loaded fundamentals, so like all this, green charts and MetaTrader 4 and all that stuff, a lot of that I've tried to get out of the way with these first 4 sessions that are 2 hours. And so from here on out, I want you telling me what things you need additional information on, because at the end, when we wrap up all the coaching, in about 2 months, what I'm going to do is I'm going to start going through those towards the end. We're going to place trades at the beginning, but we're going to look at, okay, I want you to teach me this here. I want you to teach me this here. I want you to teach me that, so that I know where your level of understanding is on each of those. And that's going to come from you asking me what topics, okay, this is a topic that I'm not quite familiar with, explain it. Describe it, show it to me, and I'll do that.
Okay.
So, but awesome. I enjoyed this session. I think it's awesome that you got got those trades in yesterday, and that you're seeing the success, because it does take a little bit of time. It does take some time to see how the indicators help you and benefit you. I'll do all I can to continue helping you with the indicators, but play with it on your own. Play with it, and yeah. Hey, so real quick, on Tuesday of next week, we have an 8 to 9 as well, but I have one right before that, a 7 to 8. Can I move yours to an 8:15? Or so 7:15?
Actually, hang on 1 second.
Okay.
Yeah, Monday, Tuesday, and Wednesday.
Uh-huh.
I have to take my kid to camp. I have to take him to camp at 8:30, between 8:30 and 9 in the morning. By the time I'm anywhere near a computer, it's like 9:30, my time.
Okay. So do we want to have those sessions, at least for next week, later?
Yeah, because there's no way I could be in front of a computer.
Okay. So what I have available, and this is just next week, or is this every week after?
It's every week, and for until basically, until like middle of August.
Okay, what's your Thursdays like?
Thursdays are fine. Thursdays, it's just Monday, Tuesday, and Wednesday.
Okay.
My wife works graveyard.
Okay.
As a nurse, and then so she doesn't get home in time.
Okay.
But then Thursday, yeah, it's fine. Thursday, Friday, I'm not worried about it.
So can I move you to, let's see, 8:30 on Thursday, which would be 7:30 your time?
7:30 to 8:30.
Yep, 7:30 to 8:30 on Thursday.
Yeah.
And then I have a morning open. So let's do Tuesday at. You get back to the computer at 9:30. You're saying?
Yeah. So hang on. Thursday. 7:30. Okay.
Yep, 7:30 to 9:30. And then.
Oh no, I can't do 9:30. Oh, Thursday. I'm sorry. Yeah.
Yep,
7:30
Thursday.
to 9:30.
Yep.
Okay.
And then Tuesday, you get back to your computer at what time?
9:30.
Okay, so 10:30 my time. So you'll be there at 9:30. You want to start at 9:30? You want to push that back a little bit?
Let's do 9:45 just to be safe.
Okay, so I'm gonna come in here and edit this. All right, 10:45 my time.
Tuesday. All right.
Okay, so for 1 hour, and I'm gonna hit save on that.
Just turning my phone. Oh, yeah. Yeah, because then when school starts again, I have to. For now, I'm taking him to school every day. But once I start trading more, I have to change that.
Okay, that's fine.
Because I don't want to be out of my computer from 7:30 to 8:30 in the mornings.
Okay.
I want to be in the market. Okay. Next thing I was going to say. Just real quick.
Yes.
And I know you only took a brief look at it, but did you notice anything in my green chart technicals on my scalping yesterday that I should have done different? Anything look good? I mean,
no.
I know it worked out yesterday, and I know, but one day is not a good sample size.
No, you're good. No, your technicals look good. You want to look at seeing where your support and resistance levels have bodies that come up against them and have across the board. And so if there's wicks they're touching, that's fine. But see if there's any bodies. I mean, if there's an abnormal wick that's kind of in an in-between level, then that's fine. But no, it looked good. And the cleanest chart you can look at is a 240. If you look at a 240 for your support and resistance levels, that's the cleanest one you can find. It's just nice lines that you see them hit all over the place, and it's very, very clean. So,
that's usually what I do.
Okay.
I started with my two. I used to, anyway. So now I'm kind of 90% of what I do is based off the 240.
Nice.
And then I work my way down.
Okay. So 9:45 to 10:45 on Tuesdays. Is that going to be from here on out?
Okay.
And then 7:30 to 8:30 on Thursday mornings. That's going to be from here on out. Does that work? So I'll put those in there and make those set. So, any other questions for me?
No.
All right.
I just got a lot to process.
Okay.
Okay. Am I moving along all right, or am I behind? What?
No, you're moving along fine. You're actually ahead because you knew a lot of the other stuff that was kind of the fundamentals. And so we're already into questions that I wouldn't be in normally until after the first 4 sessions, but we're already there. So, no, you're doing fantastic. The replay button's really going to speed up your learning process. The more so there's a lot of people like, oh, well, you can put like an hour or so into this, but at the very beginning, it's an education. So the more you put into your education, the more you're going to get out of your education. And
yeah, don't worry about that. Believe me, I'm spending hours.
Okay, perfect. Perfect.
A lot of it's been studying. It took me a long time to find the 7 and the 20 EMAs.
Yeah.
So, and so far I've stuck with those for the last several weeks, and I'm very happy with those indicators.
Nice.
So I mean, I periodically will read just random method. So no, this is good. Okay.
Nice.
No, I'll work on the replay. Yeah. So I just want to know if I'm headed in the right direction or not.
Oh no, very much so.
Yeah.
There are a few guys that have started, and they're 4 sessions in that have made 12 trades, and 11 of those they made profit on. And the other one didn't take all of their profit back from those first 11. So no, you're doing fantastic. Let's see. I had one question, I think. So next time I want to have you pretty much walk me through your entire process again from scratch. So how you draw out your technicals, how you analyze what's coming up with your fundamentals, so the announcements and news, like the whole thing from start to finish, and then what you do to look at when you're placing your trades. And so as we go through it, there might be little tweaks and critiques and this and that, but I want to see the whole process from start to finish. And because it's 9:45 to 10:45, it's kind of like right after like the really good volatile time in the morning. So it'll be not slow, but it'll be slower. So it'll be a good time for us to kind of go over that. So.
Okay. Real quick,
Mm-hmm.
something happened here on my FX Choice demo account.
Mm-hmm.
The scrolling now, it's all messed up. My screen's like 2 parts spread out.
Okay,
How do I change that?
Right click. Go down to the very bottom. I think at the bottom, I think it's properties or something like that.
Yeah.
And then on the top, you see 2 tabs. There's one that says Commons. Go to that, and there's an auto scroll little thing you got to check.
Common chart. Oh, chart auto scroll. Okay, maybe a second. Yeah, there it goes. All right.
Okay.
Spread it out too far, and they were all so tiny candles I couldn't see anything.
Gotcha.
All right. Got it. All right. Perfect. Yeah, fantastic.
Okay.
Really appreciate it.
Yeah.
Yeah. No, I'll be working on a lot this weekend. I have a bunch of other stuff to do too, but
Okay.
no, this is what I want to do here, so I'm happy.
Nice.
I want to get really proficient at this. All right, cool. Well, I appreciate everything. I hope you have a great weekend.
Okay. Yeah, we'll do, and head to the beach if you can.
I go to the beach every weekend, so I appreciate that.
Okay, perfect. Right on.
All right. Thanks, friend.
You're welcome. All right. Bye. Hello.